Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Tuesday, September 1st, 2015. The question bar is open, folks. If you have any questions, feel free to ask them. I expect a lot of questions from you guys today, especially with markets losing almost 200 points today. China continues to worry investors, though. If we take a look at the situation here in China, where we had in China the PMI manufacturing data that came out. Actually, the data are below 50, which shows that the economy is contracting. We already know that Goldman Sachs yesterday cut its growth forecast for China for 2016, 2017, and even 2018. And right now we have the Chinese index that is again bringing some selling pressure on all the indices today, folks. And all indices today are all going down. So it's a situation that is widespread throughout the market, throughout the indices. However, compared to the low that we made at opening on all indices, none of those indices are actually able to make a new low intraday. If they do, well, then there will be several nice short opportunity that we will publish on MarketGurus.tv that you can have access for free for 10 days. So far on the markets, though, we actually are being reluctant to recommend any bearish ETF in any short positions. But on MarketGurus.tv, at opening, we have published a list of bearish as well as bullish ETF, because it's not because markets are stabilizing here or staying flat that we might not have a wave of buying pressure on the market. Because actually, on a lot of the short positions that we have seen, let's take a look at, for instance, on New York. Let's see some short opportunities. So we have 54 short opportunities on New York. Now, a stock like TK Tankers, I agree, it's a clear selling signal. It's breaking down on support, right? So it's a bearish signal. However, if we take a look at this, the stock is making a new low, right, compared to this. But well, this one is good. Sorry, this one is good. It's not making a bearish divergence. So this one here, 540 is the target, but it's really limited. On other ones here, yeah, for instance, this is a clear bullish divergence. So for instance here, Globus Medical, look at the MACD 7287 histogram. Globus Medical, we're breaking down a support. It's a breakdown. It's official, right? However, look at the MACD histogram. we're making a new low on that stock, a new low, lower than this one here when the market lost almost 1,000 points, and the MACD is still above this one here. So that is a clear bullish divergence, and that confirms that really the quality of those breakdowns are lacking. However, what I said is that if ever we have markets that can make a new low intraday, that will confirm that the wave of sellers is consistent, and that will confirm that definitely we can believe in either buying some bearish ETF or shorting some new positions in the market. Now, in terms of what targets could we have on those indices, well, if we take a look at this, we seem to confirm an overbought situation in the Nasdaq. So the Nasdaq really weekly reach 4,500, which is the bottom that we have reached there. On the Dow Jones, we come and reach 15,766. On the SPY, 187 points. So there's some points to be lost there. And on the TSX, 13,000 points. So really, on all indices, if the selling pressure continues, definitely opening some short positions will pay off, because we have a lot of room to go before we reach the bottom that was reached on August 25. So this is actually an interesting point, but we need to have a confirmation that this wave of sellers is consistent, can persist, and can actually be credible, because a lot of times we have had markets that went down and throughout the day we had a rebound, and today the fact that markets are unable to confirm a new low is actually something that kind of worries us and makes us be cautious and not recommending too early short positions. Now, in terms of the news, I told you that China PMI manufacturing data are negative. On Europe, we also have a slowdown in their economy in terms of, except for Germany. France is still below 50. Eurozone actually slightly above 50, but below estimates. And if we take a look at the Canadian side, we had the GDP reading on the Canadian economy for the second quarter. Canada is officially in recession. So this is something that's really negative. So we're going to do in the next segment, we're going to take a look at some news, and after we're going to take a look at your questions and the sectors. So welcome back, folks. So we have here some news on some stocks here. So Wynn Resorts and Las Vegas Sands casino stocks are having a big problem, and their revenues in Macau, which is bigger than Las Vegas in terms of revenue generation for gambling companies, well, the revenues in Macau have actually declined. So this is something that's really negative. And one of the reasons why we have seen all those casino stocks, Wynn, Las Vegas Sands, going down is because they have a high exposure to China. Now we have the Chinese economy that is slowing down, but also we have the campaign by the Prime Minister, Hu Jintao, that is cracking on corruption. So there are several people that used to go to those casinos to do some money laundering or to spend some money lavishly, while knowing that they can be tried or they can go to jail if ever they find that this money was acquired not honestly. Well, then of course this creates some fear, and this is why I think definitely we have seen a decline in spending and a willingness from consumer to spend more, and this is why all the stocks are taking a hit. So it's really negative. Casino stocks are definitely not a sector I would like to have some exposure to right now because of what's happening there in China. Now, Couche-Tard released their earnings today. They were slightly lower than estimates, but still Couche-Tard, so far investors are continuing to buy the stock. The stock stays neutral. Valeant, they acquired a drug from AstraZeneca, so the stock is slightly going down. We have Canadian Pacific. They say that they will increase their share buyback program, so expect that Canadian Pacific at a certain point, whenever it reaches that bottom of 178, that you will have a rebound on that stock because they have increased their share buyback program. So definitely that will be positive for that stock. So definitely I expect towards 180 to actually have a pause in potential rebound in Canadian Pacific. Even if it stays within its downward corridor, I think to build up your positions towards that positions, if you have, of course, some technical indicators that show you a wave of buyers is coming in at 180, I think that will definitely be a great opportunity with the company that says that they will increase their buyback program. Penwest Petroleum, they're a victim of the weak oil prices. They're suspending their dividend, cutting their workforce. So it's really negative for Penwest Petroleum. The stock took a big hit recently. and it has been a victim just like a lot of energy stocks. Now let's take a look at some questions that we have here. Now, Donald, what makes a trader a good trader according to you? Well, there are many factors, Donald, that makes a trader a good trader according to me. I think there are first the ability to mix technical analysis with fundamental analysis. What I mean by that is that respect the chart to determine when a stock should be a buy, when it breaks its resistance, or get out of a stock if it breaks its support. Add fundamental analysis, which means that what is the company doing? What are their cash flows? Are they generating some profit? What are the analysts' view on that company? I think this is a first aspect. Second aspect, it's about our bias. As traders, we all have bias. For instance, I know a lot of traders, by looking at your questions, I know some viewers have what's called a loss aversion bias. For instance, they hold on to a stock, even if the stock is losing money, they continue to hold on to it because they don't want to sell it at a loss. So they're averting the loss. That's why it's called loss aversion. It's the bias we have. One of the bias that I have to work against is the fact that sometimes I have this overconfidence bias. So sometimes I think that when I'm going to buy a stock, that eventually it's going to make a 5-10% during the day, and I'm going to quickly take some profit on that stocks. And a lot of times it doesn't really work. This is a bias that sometimes I'm victim of. I think the key thing is first to make sure that you're aware of those bias and try to set up some strategies to avoid them. In my case, for instance, because I'm a lot of times victim of overconfidence, what I'm trying to do is that instead of buying a full position on a stock, even if I think that the stock is going to do well, I go in gradually, and when the stock proves to work, I might increase my exposure there. So I've learned about myself to be a little bit more patient on my trades, and this is something I think that you should do. So first, mix technical with fundamental analysis, first aspect. Second aspect, be aware of your bias and try to take some steps to not control them, but try to make sure that they don't impact as much your trades. And I think with that, you can definitely be a better trader. Now, in the next segment, we're going to take questions from National Bank, and after questions from Al. And after that, folks, we're going to take a look at the day trade of the day.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
Now we have one question here. Would you consider HVU over $91 as a sign that markets are going to break down? Well, definitely the fact that HVU is going up, clearly up, breaking $91, it's a clear sign that markets are negative. Investors are nervous. What's happening in China, what's happening in Europe has an impact on investors. Now, of course, on Friday, it's a key indicator because we have the jobs report. That's going to be interesting to watch to see how the economy is doing. Tomorrow we have the ADP, and on Friday we have the jobs report from the government. So yes, there are some signs that with HV that is going up, that markets are going to break down. As I said, there's a possibility that if ever the breakdown is confirmed, which means if markets make a new low, that there will be a lot of potential before we reach the bottom of August 25th. Now, one thing I think I take a look at is the SPY. For instance, we take a look at the SPY here. I put a 30-minute period, 250, and I put the RSI 15, because the RSI 15, what we have found is actually gives us when is the market going to rebound. And take a look at those bottoms here on the RSI 14. Every time we have tested that bottom here, we have had a market rebound. Around here, this was this rebound. Around there, this was a short-term rebound that happened at the end of the day. And here, that was the bottom of August 25th. And now at those levels, we're testing this level here on the RSI 14. So if ever markets make a new low, the RSI 14 goes lower than that level, I definitely think that will be clearly bearish. So what I would do, I would say, okay, HVU is going down. I think that there's a possibility that markets are going down. So I might build up my positions on HVU. I would say go in with a quarter or a half of a position. And if ever you see that markets are rebounding, that the RSI 14 on the 30-minute 250 period on the SPY is not going up or is going further down, then that will be a clear sign that you could actually continue to build up your exposition on HVU. So if the RSI 15 goes lower than that, that will confirm that buying some positions on HVU will be a good thing. I think that at those levels, you can start to buy some because markets are putting a lot of selling pressure. And at those levels, though, we have decided on MarketGurus.tv to close our positions on our bullish ETF that we had in the market, which was UPRO, because it actually broke down its support. So definitely, yes, I think that HVU would be considered a good buying opportunity today. Now, where do you see support for USO? Well, on the energy sector, though, if you had bought some positions, I think none of them are really at risk for the moment. Where do I see support? Now, there's no real support on USO because USO has been is just having a correction within this short-term upward trend. Now, where you could see a support, you could take a look at the moving average. You could say that there's a support at $14 and resistance around $16, which corresponds to the 50-day moving average. So $14 could be considered as a, I'm not saying a support, but a critical point where if USO goes below $14, well, all of you who have opened some positions here or there on the energy sector should get rid of them, right? Because that will mean that the sector will go further down. So if USO goes below $14, it's a clear signal where you should get out on your positions on the energy sector. So you want to get into HOD. Yeah, so as I said, HOD, if ever. HOD, well, you have to see the reversal of this downward trend on HOD. If USO goes below $14, HOD, I think, will be able to break 1321, but so far, we're not seeing buyers as much on HOD, which is the bearish ETF on oil. So yes, for me, there's more room to go before oil can break down that support, but it could happen. So it has to watch, and HOD must be put on your watch list. But so far, I don't think it's a go because we still have this upward trend that is maintained on the energy sector. And the sector today is only confirming a neutral formation. There's no bearish cycle at all, even if there's a sell-off on a lot of sectors. So for the energy sector is still resisting. And the fact that OPEC members might meet this during the following days, the fact that production in the last quarter in the US has been declining is something that I think gives investors hope and not giving too much appetite for sellers. So I don't think that HOD will break out or will confirm an entry point soon with those recent data. Now, you bought SQQ at 2660 at 1205. Do you think this is a good entry point, exit point? 2602. So you bought SQQQ at 2660. Okay, let me just put 3 minutes. Okay, so 2660. Okay, great point. Do you think this is a good entry point? Exit point 26.2. Yes, it's perfect. It's perfect, Chris. I agree with your strategy. The thing is that if I think you should, if ever you're making a 5, 3, 4%, I would at least take some profit on it, even if it's not 5%, at least 3 or 4%, just in case. Tomorrow's job numbers turn out to be positive and markets go back up, because so far, even if their investors are nervous, markets are unable to confirm a new low. So this is why I think you should be quick to take slightly some profit on that positions. Great exit point, great entry point. You respected that, but make sure that you get out on that stock if ever it goes below 26.2 and at least take some profit before the closing of the bell on a stock like that, even if it's 3 or 4%. Even if you hold on to some positions overnight, but on some of it, at least take some profit. But great job there, Chris. Now, I'm going to take Tom's questions tomorrow because the show is over, but I'm going to show you here the day trade of the day. It's a stock that's called ASTI. Really a pretty nice performer on ASTI though. Look at all those entry points on a stock like that. Really, I have nothing to say. Pretty easy trade in terms of those entry points. They were really clear. Sideways formation, breakout, sideways formation, breakout, and all of them almost worked. So that's definitely be a great opportunity for that stock. Now we have already reached the resistance there, so I don't expect that the stock will go further up, but this was actually a great day trade today on the Nasdaq. So overall, folks, we have markets that are negative. Canada is officially in recession, but so far a lot of sectors are in a bearish cycle. The number of selling signals, though, a lot of them are lacking quality. I've shown you a stock, for instance, where the MACD 7287, even if the stock is making a new low, the MACD 7287 is showing us a bullish divergence, which is not good for a shorting signal. So the fact that we have that, I think what's wise, though, is to wait for markets to confirm a new low. I know there's some bearish ETF, for instance, one mentioned HVU. You can build out your positions on those ETF, though, but make sure that you go in gradually, and make sure that if you open some positions at opening on those bearish ETF, that you can at least take some profit on those ETF. Do not hold to your full positions overnight, because tomorrow we have the employment report, the private employment report that will be released. If ever it's positive, we might see some buyers getting into the markets again, because even if there's some worries concerning China and Europe, so far markets have not been able to make a new low compared to opening. And that's a sign where you should definitely remain cautious to not be caught in a false selling signal if ever markets cannot confirm a new low during the day. So that said, see you tomorrow on the Swing Trading Show on DecisionPlus.com.